Let's take a look at some charts on ETC from this week's article on Brave New Coin. So ETC was birthed from a DAO hack where the ETC devs and community, some of them, most of them, decided to essentially revert the hack, create a fork to fix the issue. And not everyone agreed with this. So ETC was born as essentially the original fork with the DAO hack. So you can't look at ETC without comparing it to ETH because they are twins, basically, aside from a few minor differences. And just comparing them side to side, you can see that ETH just takes all of ETC's lunch in every category. I mean, especially if you look at the fees, it's astounding. They have 2 million in fees on chain for ETH per day, whereas ETC has like $25 USD per day. So there's a clear difference in on-chain usage there. Obviously, I mean, ETH is having a bit of a moment in that its on-chain usage is nearing all-time highs day over day over day. So I really don't see a future for ETC unless something dramatically, catastrophically happens for ETH. The other thing I'll talk about later in the video is the now 2 51% attacks that have hit ETC. For me as a trader and investor, I cannot touch a chain that's been 51% attacked once, let alone twice, because that says the security isn't there. Coins can be double spent, coins can be created out of nowhere, coins can be hacked, coins can be replayed, type of double spend. And really, until the exchanges start delisting ETC, there really won't be any dramatic price reaction because the market just generally doesn't care. They really don't. What you'll start to see is confirmations for ETC on exchanges reach like 1 week or something like that. So then you'll have all these siloed prices for ETC because nobody wants to move their ETC anywhere, and it's just a disjointed, nonsensical market. Another comparison is the ETC versus ETH inflation rate. You can see ETH is about 4.5, whereas ETC is closer to 6 in some change. So just more reasons not to hold ETC. If you've got a nearly identical chain and it's got lower inflation with an insane amount of usage, you just have zero reason to hold on to ETC over the near term. Because over the long term, you're just getting diluted. So why bother? Just buy it later at a lower price. That's my vantage point anyway. If you look at Grayscale, so they are Pink Sheets, Barry Silbert group that allows traditional institutional investors or 401k investors to buy into various trusts, including ETC. They hold about 10% of all the circulating supply for ETC. They were one of the early, specifically Barry Silbert, they were one of the early people backing ETC and the whole ETC movement. So it's unlikely that they'll ever delist ETC. But if they ever do, that is a huge signal that ETC is definitely doomed at that point. Something else virtually no one talks about is that ETC initially was an IOHK product, which also does dev work for Cardano. So it's hard for me to believe that they're going to be doing dev work for 2 chains. IOHK is treating ETC, in my eyes, like a redheaded stepchild. If they're even doing anything anymore with them, I don't actually know for certain what the deal is there for the types of dev work that they're doing. But that was initially what was happening. It's probably still even listed on their website. If you look at the ETH Hash ASICs, it was a new one released in May, but there's really been nothing past 2018 aside from that one. This is probably because ETH is moving to proof of stake, so all these are going to be bricked for ETH specifically. So unless ETC picks up the slack for mining profitability, it's unlikely that ASICs for this algorithm will just continue to be manufactured. If ETC is dead and ETH is proof of stake, there's really no need for this algo ever again to be created for an ASIC. It just doesn't make sense. And the mining profitability for ETH is so amazing right now because of the fees that it's really sucking any of the hash rate from ETC onto ETH. At least that's my read on multi-year lows for this hash rate. And as hash rate continues to fall, the probability of a 51% attack goes up, the cost of a 51% attack goes down, and the network just becomes more and more insecure. All the more reason not to hold on to it right now. And here's an article on what that looked like. They stole 5.6 million during the July 31st 51% attack. So again, this isn't a chain I ever want to touch with any amount of money. Why would you? There's just no reason. If you look at some on-chain stuff for ETC, transactions are basically trending down since July 2018. Transaction sizes are volatile up recently, but mostly just back in this range here. Definitely not a bullish picture in general. A lot of spikiness here, a lot of inorganic, non-organic spam and or random stress tests. This is what I consider very obviously organic usage over time. You know, when you get these spikes that double, triple, quadruple activity, that isn't real. Looking at active addresses, also basically at the bottom of multi-year lows. It's hard to even know how much of this is real. Obviously this spike wasn't real, not sustained, not continued week over week. Just straight up, straight down, straight up, straight down. So really the range is around 100K active addresses or less. NVT continues to rise over the past few months, which is bearish. It says that the market cap is overpriced for the on-chain activity. Definitely not a bullish situation. So no technical that I can point to is bullish for ETC right now. I don't even see it as a dip buying or knife catching opportunity because of the 51% attack stuff. Because all that means, you know, all this that gets stolen has to be sold somewhere. So that just continues to push price down. And this is just ETC that we know about that has been 51% attacked. I mean, it may come about that you just see additional dilution over time, just hidden that something else happened, right? Like, we don't know. Anything is possible here. You'd have to audit, like, the alternative chain, you know? It's like Back to the Future where there's so many timelines. But that's what's happening here. There's so many chain possibilities now that who knows the amount of ETC that's just running in the wild. If we look at technicals are more forgiving in that they're neutral to bullish. You can see we have a bullish 50-200 cross, yearly pivots, VPVR, Bitfinex long short ratio, RSI and volume. It's also trending outside of the bearish pitchfork. So technicals, you know, look okay. I didn't mention this in the article, but there's also this Adam and Eve situation, double bottom. I really don't see this getting past 12.16, and even if it does, there's really no reason to touch it because you just never know when all those 51% attacked coins are going to be sold. So there's this hidden whale risk that is looming continuously for ETC now. It's just, you know, it's going to limit upside, it's going to enhance downside. It's just really bad all around, and your coins aren't secure. So why bother? Nothing really to speak about. Long short ratio just kind of flat over the past few months. VPVR has resistance at 16, but this whole chart is kind of meaningless. You know, you're just creating coins out of thin air. Cloud also likes it from a trend perspective. So, you know, if this wasn't 51% attacked twice now, this would be a pretty decent chart in a vacuum. But knowing all this stuff on the fundamental side, it's just hard. And looking at ETC, BTC, it looks ready for all-time lows. It's trying to bottom here, but this isn't really, there's not really a bottomy pattern or anything. It's below all the support. This was a great Adam and Eve example, multi-month. This is what you want to see out of a chart pattern. You want to see 20 days, 50 days. This was like 120 days or something of consolidation before breakout. And then it popped up right back down. Unable to hold that horizontal. It's below that support resist level. So this just doesn't look good from any metric on the ETC, BTC side, which makes sense. And especially if it's continued to be dumped on exchanges, unless there's some surveillance done on the exchange side, which definitely is. It's just not worth it. It's not worth it, folks. It's not worth holding, touching, talking about. You know, I thought about not even talking about ETC. I just don't like giving attention to projects that shouldn't be bought by anybody. But there was a pretty big fundamental event with a 51% attack. So it's a big avoid for me, big red flags on every possible metric.